Hey, what's up? It's Tim from EminiMind. Just want to do a quick video today. It's expiration week, so we're kind of in futures rollover here. Rollover is actually the Thursday to Friday of the week before expiration, and what that means is that the current contract. So we've got March, June, September, December. Those are the four expiration months. You can kind of see here the this green line is the now we are in the new month. So we were in June up until Friday of last week, and then now we still have both contracts trading June and September, but September has more volume, and that's what the rollover is when the volume shifts from the current month, so what was June, to September. And this June contract is going to be expiring this Friday. So what that means, we've got expiration this week. We've got the Fed meeting on Wednesday. Today was a pretty slow, nothing day, really tight range. There's likely to see a lot more of that this week. I don't trade on the FOMC meeting announcement Wednesdays, and I don't trade on expiration Friday. Didn't have anything today. We're just going sideways, pretty quiet. So these are good weeks to take a little break or schedule a holiday or just kind of watch and observe and maybe be present in case something does pop up, but not be overly aggressive. You'll notice that we've got this giant gap. If you just put in the ticker symbol and not the month and the year of the contract, on most platforms, it'll give you the continuous contract. And so when you go through rollover like this, there's always a little bit of an adjustment. And so this gap is not really as big as it appears. But because the contracts kind of get smushed together, you can have some funny things happen, or the charts can look a little bit funny on the around this week of expiration. So that's another reason, because you've got traders, some traders are still trading the June contract, but there's more volume in the September contract. So the September one is what you want to really be trading, and you want to make sure if you have a different trade ladder, a different platform that you're executing your trades on, make sure you're on the same chart as you are, make sure you're on the same trade ladder as the chart. So if you're on the September chart, which the continuous contract is, make sure your trade ladder is also on September. Otherwise, your prices will not match up and you'll be all thrown off. So a good week to kind of sit on your hands and just observe. We will be doing a live trading session tomorrow. There's a handful of things that we're going to talk about, just kind of good time to touch base on some various strategy pieces and things like that, but not expecting a huge day in the markets. We have been going up quite a bit, as you can see on the daily chart. If you want to buy puts ahead of this Fed meeting announcement, we are at the negative 23 from this 50%, and we've gone up quite a bit. So maybe at the close today or tomorrow, a small position, but I'm not really, volatility's fallen off a lot. There's not much expectation. There's probably about zero expectation that rates will be raised for the Fed meeting announcement. So probably more along the lines of what's said at the meeting announcement could move the market a little bit, but things are just kind of chugging along. It's summertime. That's typically what we see, smaller ranges, so no surprise there. And then we'll have the expiration of this June contract on Friday, and that will give us, now that one will completely go away, and then next week it'll just be the September contract. And so watch out for these expiration weeks. Now, next Monday is actually going to be a holiday as well. Markets will be closed for Juneteenth, and so if you're buying puts or doing any swing trades, just keep in mind that the markets will be closed next Monday. So we'll keep it short and sweet today. Talk to you tomorrow morning in the live trading session. Hope you have a great week, and we'll talk to you soon.